The US dollar's rise, a global impact, but at what cost? The US dollar is on an upward trajectory, outperforming most major currencies, especially against the Australian and New Zealand dollars. But here's the catch: this strength is accompanied by a risk-off sentiment in the markets. As the dollar soars, stocks are taking a hit, with the NASDAQ plunging by over 300 points. And this is where it gets interesting. Lower yields are further fueling the risk-off environment. Let's dive into the currency markets. The euro to US dollar to Japanese yen, and pound sterling to US dollar pairs are all under the microscope. The euro to US dollar has been on a 5-day downward streak, losing 0.33%, while the pound sterling to US dollar isn't far behind, down by 0.62%. The US dollar to Japanese yen, though lower, is a unique case as it's lower against the US dollar. But wait, there's more. The upcoming Supreme Court arguments on tariffs, expected to be heard on Wednesday, could be a game-changer. The court's decision, typically delivered months later, is eagerly awaited. Interestingly, for cases argued in November, decisions often arrive between January and June of the following year. Will this case follow suit? Now, let's shift our focus to the Swiss National Bank, SNB. SNB officials, led by Chairman Schlegel, struck a balanced tone. They foresee a slight inflationary rise but acknowledge the drag of U.S. tariffs on global growth. The SNB's commitment to maintaining current rates is strong, with a return to negative rates deemed highly unlikely unless significant economic shocks occur. Policymaker Petra Skudin supported this view, highlighting the importance of exchange rate movements over absolute levels in managing inflation. The US dollar to Swiss franc exchange rate reflects this sentiment, rising modestly but still near its lowest point since 2011. Meanwhile, the Reserve Bank of Australia, RBA, held rates steady, as anticipated. The SNB's message was clear: any rate cuts will be gradual, and a prolonged period of unchanged rates is likely. Their inflation forecast suggests a slow and steady approach to policy normalization, with a return to the target range midpoint only by the end of 2027. And finally, the U.S. stock market. The NASDAQ, S&P, and Dow Jones Industrial Average are all in the red, with notable declines. The debt market tells a similar story, with modestly lower yields across the board. So, is the dollar's strength a sign of a robust economy, or is it a double-edged sword? What are your thoughts on the SNB's approach? Share your insights and let's spark a conversation.